Welcome back. You're watching us here on Chartbusters. Let's talk about Sula Vineyards. It's been a subdued listing for the company. It listed at a premium of about 1% to the issue price, but now it has sold off, currently lower by about 4%. To discuss the business outlook for the company, we do have Rajeev Samant, who's the MD and CEO of the company, joining in. Rajeev, you know, the last time you spoke with us, you mentioned that you might enter the 2,000 rupee plus price bracket, but nearly half your revenues come in from, anywhere between 700 to 950 in terms of the price band. Just wanted to understand, what kind of growth do you see in the 2,000 plus category? And now that you're listed, you're at liberty to tell us a lot more about the future prospects of the company. Can you tell us what does your revenue and revenue mix look like going forward?
Hi, it's great to be here. Today is a real milestone in our journey, in my personal journey. We just got listed today. And I want to remind that this is a very long-term story. You know, people are always saying, isn't India really all about whiskey? Yes, whiskey is the king in India, and we are not looking to dethrone the king anytime soon. We have a fantastic journey ahead. Wine is growing faster than whiskey, than spirits, than beer. This is the story. It's a long road ahead. Sula is the leader in that. India is changing so fast. Wine has terrific prospects here, and it's at every price segment. So, though 2,000 rupees is important, for us, most of our wine is below 1,000 rupees. So the 700 to 1,000 rupee segment is, in fact, our most important segment. That's where you have the iconic Sula Vineyards logo wines, and that's really what India knows to be premium Indian wine. And there's a lot of terrific growth ahead in that segment.
Okay. Mr. Samant, when you're talking about terrific growth going forward as well, first half for the company has been really strong as well. You've been able to do margins of 29%. Profit growth has been decent as well. Can you give us a sense of how growth will be in FY23 and FY24? What will bring in this growth as well? Will it be the change in mix of your products? Will it be more focused on other high margin products like wine tourism, for example?
Yeah, I can't give you very specific numbers. What I can say is if you look at our prospectus, Technopak has projected strong double-digit growth for wine in this 5-year period. And definitely, I can't see any reason to disagree with them. At this point, we are seeing revenues growing strong double digits. Of course, H1 was a terrific H1. Revenues were up 40% over H1 last year. We don't expect that kind of growth in H2. That's going to moderate. But we see growth across the board. And wine tourism is really booming. So, you know, hotels are full. More and more people coming out to our vineyards. You know that Sula is one of the most visited vineyards on earth. Over 3 lakh people enter our doors every year. And that doesn't show any signs of slowing down, and that's a very profitable business for us. More than being really profitable for us, it's also the place where so many people taste their first glass of wine for the first time.
Yes.
And that's really helping us to explode.
Yes, I do get that point, and that's something that we've seen in terms of margins as well. Right now, what is the proportion of revenues coming in from wine tourism? And you did mention the last time we had spoken to you that this is the high margin business for you. So will you look at increasing the pie of revenues coming in from here?
So I should point out that something like 85% of our revenue today comes in from our own branded wines. Wine tourism right now is less than 10%. I don't see that mix changing in a very big way, because in fact I see more growth ahead for our wine brands. That's really our main business across the country. There's so many states and cities where we are barely scratching the surface. That's really where I see really good growth going. Wine tourism has, to some extent, limitations on growth. Obviously, it's CAPEX heavy if you're going to add additional rooms, etc. So I see this kind of ratio is probably going to be pretty stable in the couple years to come.
Rajeev, you know, it's interesting. We speak about trivia. The name Sula comes from your mother, Sulabha, and that is also the wine that does extremely well for you. But what I'm looking at is the brand that comes from your name, Rajeev Samant, has compressed into brand Rasa, which is, again, the premium category. Again, just wanted to understand, what is your positioning going to be there? Because everyone who has their first wine I wouldn't know much, but what I gather anecdotally is that everyone who has their first wine would be a local wine, would be the sub 1,000 rupee one. But every time they have to premiumize, they will look for imported opportunities which they believe are better tasting, more established. In that case, in a market which is just about 1-2% of the overall alcohol market in India, how do you plan to premiumize, and how big does Rasa become going forward?
So, you know, the story of Indian consumer brands, and especially when you talk about food, alco-bev, there's a lot of premiumization going on in India, and Rasa fits perfectly into that story. The growth of Rasa is much faster than the category of wine as a whole. So more and more Indians are realizing that you don't have to only reach out for imported wine once you're ready to spend 1,500 rupees. Rasa is winning awards across the world. Our Rasa Cabernet Sauvignon was the first Indian wine to win a medal in the Global Cabernet Masters this year. So that's just a testament to the quality that today we're able to produce. You know, these wines go through barrel aging, and in fact, they can compare well with imported wines that are at double the price. And more discerning Indian consumers are realizing that, wine consumers are realizing that, and I see a very sunny time ahead for our Rasa, for our source brands, which are our premium level brands.
Okay, sunny times ahead. Mr. Samant, I wanted to ask you about your CAPEX plans as well. You are talking about additional capacity coming in. A CAPEX of 130 crore rupees is what you've planned here. What kind of opportunity do you see here from this CAPEX? How much will this increase capacity to? And what is the asset turn, the additional revenues you expect?
So that 130 crores, I should point out, is over a couple of years. So right now, we are building a 6 million litre capacity new winery, brownfield, at our Dindori site to augment our existing 14 million litres of capacity. So it's a pretty significant expansion, and that just speaks to what we see as our potential for growth in the years ahead. With the double-digit growth that we see happening, we need to put in this kind of CAPEX right now. Once this cellar is in, we don't expect to have to build another cellar for at least a couple years after that. But that's exactly what this CAPEX is mostly being used for right now.
Thank you. Rajeev, just the final question then. You spoke about double-digit revenue coming in for the industry. I presume you would grow faster in that. Just plugging in the numbers, it implies that you could be a 600 to 700 crore brand in the next couple of years. Is that range that the street is working with correct, with margins closer to that 28 to 30% brand? You can comment on that. And wine as a business is inventory days heavy. So what do you plan to do to reduce your cash conversion cycles?
See, 600 to 700 crore, I'm not going to argue with that. But, our timeline in this is much longer term. So yes, next year, I guess that's important for the market. But in terms of wine, of course, horizons are long. Definitely, we've got some plans for next year. I'm looking 5 years out. I see no reason why, in a few years down the road, this should not be a 1,000 crore company. I don't see any factors that are really going to push back on that. And really, I would say that that's something that we definitely have in mind. And in terms of margins, we've done some terrific work over the last couple of years, really to streamline things. So I definitely see margins remaining stable. And, it's not a bad guess to say that it's going to be in the 25% plus EBITDA margin range. That's definitely something that we're looking at. Of course, in the last 6 months, 9 months, the margin has been far higher than that, as your colleague just mentioned earlier.
Okay. All right, Mr. Samant, it was a pleasure speaking with you. Thank you so much for joining us, and welcome to Stock Markets. That's the word coming in from Sula Vineyards. They expect double-digit growth in the second half and margins around that 28 to 29% mark. We'll do one thing, slip into a short break, and on the other hand, we'll get stock specific and talk about the fact that Reliance Industries has bought Metro Cash and Carry.